Hey guys, welcome back to Mainstream Cryptos. I'm your girl Abby, and this is the space where we take a weekly look at news from across the crypto world. There has been a lot happening recently, so we've put together the top 15 pieces of news that we're going to look at together today. Why do we do this? So that together we can be informed in order to invest and not just gamble. So let's jump into it already. Let's start by taking a look at how crypto has responded to recent changes in the US labor market. Bitcoin and Ethereum have experienced seesaw movements as the US adds a massive 263,000 jobs. Digital asset markets are experiencing seesaw movements late this week after the latest US labor report shows more jobs were added last month than expected. The number of jobs increased by 263,000 in November, while the unemployment rate remained unchanged at 3.7%, according to a new report released by the US Bureau of Labor Statistics, the BLS. Further down in the article we read, as markets reacted to the latest data, Bitcoin reached a day's high of $17,129 at the time of writing, before dropping by 1.4% to $16,881. The top crypto asset by market cap is changing hands at $16,971. On the other hand, Ethereum reached a day's high, just like Bitcoin, at time of writing of $1,296 before dropping, again like Bitcoin, by 1.85% to $1,272. At the time of writing, the top altcoin is valued at $1,281. So the crypto world has been seeing some fluctuation as a result of the developing US labor market. Speaking of the US, let's take a look at American crypto investment and how this has been picking up recently. US institutional investors are flocking back to Bitcoin. Is the bottom in? Let's see if we can answer this question. The Bitcoin price has seen a minor rally after yesterday's speech. Well, it's not yesterday's anymore, but after the recent speech by US Federal Reserve Chairman Jerome Powell. The price rose above $17,000, driven by the statement that smaller rate hikes are likely imminent and could begin in December. US institutional demand for Bitcoin is coming back. As CryptoQuant CEO and founder Ki-Young-ju noted, market sentiment among large investors in the United States is recovering. Ju comes to this conclusion as the hourly Bitcoin price premium on Coinbase has turned positive for the second time since the FTX bank run. As News BTC reported, there is still one major concern for the market at the moment: a possible bankruptcy of Genesis Trading and VCG. However, these rumors scattered in recent days. The companies are believed to have only a solvable liquidity problem and not an insolvency issue. So, the question, bottom in or more pain? However, continued selling pressure from a second Bitcoin miner capitulation within the current cycle is looming and likely to cloud the positive outlook. As we have reported, miner capitulation is in full swing. According to CryptoQuant, about 4,000 Bitcoin of selling pressure was added by miners this week. The company's data shows that miner transfers to exchanges picked up as the price fell from about $20,000 to about $16,000. In addition, miners' Bitcoin reserves have fallen by 13,000 Bitcoin since the end of August. They are now at roughly the same level as they were at the beginning of 2022. So, just looking at the Bitcoin market, it doesn't seem to be going too badly, especially with US institutional investors bringing greater demand. However, let's take a look at the other side of things just to get that balanced perspective. What do others have to say about Bitcoin in particular? The European Central Bank has been berating Bitcoin and saying that it is on the road to irrelevance. Is this true or not? Let's see what they said in a tweet on November the 30th. The apparent stabilization of Bitcoin's value, which by the way we saw in the last article, is likely to be an artificially induced last gasp before the crypto asset embarks on the road to irrelevance. The EC blog looks at where Bitcoin stands amid widespread volatility in the crypto markets. So they're taking quite a negative stance with regard to the future of Bitcoin. The post asserts that Bitcoin's recent price stabilization is not an accumulation before forming new highs, but it's a last-ditch effort by malevolent forces to maintain the hype before it all crumbles. It is authored by Ulrich Bitzel, Director General of Market Infrastructure and Payments at the European Central Bank, and its advisor Jürgen Schaaf. For Bitcoin proponents, they say, the seeming stabilization signals a breather on the way to new heights. More likely, however, it is an artificially induced last gasp before the road to irrelevance. The piece argues that Bitcoin has failed to perform as a means of payment and investment asset. Is that true or is it not? The crypto community has, not surprisingly, been responsive to this attack on Bitcoin, and they have picked up on several flaws in the bank's claims. One is false claims about Bitcoin's usage. Another matter to take into account is the conflict of interest, because the authors are also known proponents of central bank digital currencies, and so they're obviously not going to be endearing themselves to a centralized asset like Bitcoin. In addition, the German economist Jan Wustenfeld poked holes at the ECB's forecasting abilities, proving that they were wrong before, so they may be wrong again. In conclusion, reports of Bitcoin's death are greatly exaggerated. Despite the ECB's claims, the development of scaling solutions like the Lightning Network has only increased the usage of Bitcoin in payments. El Salvador and the Central African Republic have made Bitcoin legal tender on the back of these advancements. Notably, Brazil recently passed a bill making it a lawful means of payment. Look, there are always going to be doomsayers, specifically when it comes to huge markets like crypto and more specifically Bitcoin, which is one of the most well-known assets in the market. Whether or not these forecasts are accurate is another matter entirely. However, it's important to note the flaws in the claims that the European Central Bank is making to really undermine its arguments. And I would say going forward, things are actually starting to look up, especially after the FTX drama. However, don't take my opinion on it. Let's look at some other hard evidence. First of all, Brazil has approved a bill to legalize Bitcoin as a means of payment. Well, this certainly contradicts the previous claims made about horribly low usage. Brazil is one step closer to fully regulating its local cryptocurrency scene, as the Chamber of Deputies recently approved a bill. Some details. The lower house of the National Congress of Brazil, the Chamber of Deputies, has approved Bill 4401 of 21, which seeks to effectively enact an appropriate regulatory framework for the Brazilian crypto industry. According to a report from the Brazilian internet portal UOL, the Chamber of Deputies approved the bill on Tuesday after months of delay. The effort started when Brazil's Committee on Economic Affairs, CAE, approved the bill in February this year to regulate crypto. Well, there we certainly have an example of Bitcoin's use growing and spreading and becoming more prolific. Furthermore, Italy is well on its way to imposing 26% tax on crypto capital gains. Italy plans to impose a 26% capital gains tax on cryptocurrencies as of 2023. Although the tax is only applicable to gains that are up to €2,000, approximately $2,062. Owing to this new law, crypto holders will be expected to declare their current crypto holdings, and only a 14% tax will be requested on them. By doing this, it is believed that Italians will be incentivized to declare their crypto on their tax returns. This law is yet to be approved, but is still being considered together with the budget plans for 2023. Stripe debuts fiat crypto payment offering for Web3 businesses. The widget allows customers to more easily use crypto to engage with businesses and content creators across the world. This is one of the huge benefits of crypto that we can see here. Payments firm Stripe has debuted a project Let's see the details. They're offering a customizable widget that can be embedded directly into a decentralized exchange, non-fungible token platform, wallet, or decentralized app, called a dApp. It's designed to allow customers to instantly purchase cryptocurrencies in Web3 apps. 11 of the company's initial 16 projects are built on Solana. Stripe says it offers customizable on-ramping services and handles know your customer, payments, fraud, and compliance issues. One of the initial projects to use Stripe's new on-ramp is Audius, the decentralized music discovery platform. It has adopted Stripe's payments offering to enable users to use their credit cards to purchase its native audio token to tip their favorite artists. Another project that is using Stripe's widget is Solana-based decentralized exchange Orca. Users will now be able to make fiat purchases for tokens such as USDC and SOL via an on-ramp built inside Orca. So it looks like it's taking off, and it will be interesting to see how far it goes. Meanwhile, Russia's Sberbank is integrating Metamask into its blockchain platform. Yet another country, and to be honest, a surprising one, that has decided that crypto and Metamask in particular is going to be beneficial. On November the 30th, Sber officially announced new opportunities for its proprietary blockchain platform, including compatibility with smart contracts and applications on the Ethereum network. This would allow developers to move smart contracts and entire projects between Sber's blockchain and public blockchain networks, the bank said. Sber's latest additions also bring an integration with major software cryptocurrency wallet Metamask, which is used to interact with the Ethereum blockchain. The integration allows users to make operations with tokens and smart contracts based on Sber's blockchain platform, the announcement notes. Sber Blockchain Lab works closely with external developers and partner companies, and I am glad that our community will be able to run DeFi applications on Sber's infrastructure, said the head of the Blockchain Lab. As previously reported, Sberbank has been actively developing blockchain products in recent years, filing an application with the Bank of Russia to launch a blockchain platform for its Sbercoin stablecoin in early 2021. After receiving the central bank's approval in spring 2022, Sber finally announced its first digital currency deal in June. Sber's majority shareholder is the government of Russia. Why am I not surprised? Holding 50% plus one share. So Russia is also heading this route, and rather ironically, we're going to now move on to the Ukraine, who are also updating their crypto framework. Working on their national framework, the amendments to the law on virtual assets, the Ukrainian regulatory community actively collaborates with international experts. The list includes the international consultancy firm Ernst & Young and the USAID Financial Sector Reform Project. On December the 1st, the Advisory Council on the Regulation of Virtual Assets, organized by the National Securities and Stock Market Commission, held its first meeting. The regulatory experts discussed the amendments to the law on virtual assets. This relates to the tax code on crypto regulation as well. As Yaroslav Zelesniak, a member of the Ukrainian parliament, noted, the national approach will rely on the do no harm principle. The goal, he said, is simple: to make crypto circulation in Ukraine legal and safe, but according to the principle of do no harm, so that the market receives not regulation, but incentives for development and competitive advantages. So there we have it, a number of countries that are implementing new and updated crypto policies in the last few days, weeks, and months. Moving on, we're going to now take a look at new policies on the other side of the world, in the US, in New York. Recently, This has come up. New York authorities are going to charge crypto firms for regulating them. That's a funny way to put it. Let's see what is happening here. New York's Department of Financial Services, the DFS, has proposed new legislation that would allow it to collect fees from certified cryptocurrency businesses. It may seem strange that the DFS would charge regulated non-crypto financial entities for the cost and costs of maintaining oversight. But this is standard procedure under the Financial Services Law, the FSL. According to the proposal paper, the Regulatory Authority of New York would assess fees to businesses based on the proportion deemed just and reasonable for other operating and overhead expenses, in addition to the overall operating expenses incurred by supervising licensees. Given the varying degrees of scrutiny faced by different businesses, there is no universal fee structure. The whole debt, however, would be spread out over the course of the fiscal year's 5 installments. Quite frankly, I'm not surprised. The authorities have to be funded somehow. So who else are they going to charge? That is our policy news for today. We're going to move on now to look at a different topic related to the world of gaming. There has been a new report that the blockchain gaming sector has seen 500 million plus investment between October and November in 2022 alone. Wow, this is big. The blockchain gaming sector has received investments of 534 million between October and November this year, and gaming continues to account for almost half of all blockchain activity, a new report has found. Well, is this even surprising? People need entertainment, and gaming is an addictive form of this. But let's not go there. The report, written by Web3 research firm DAppRadar, said that the blockchain gaming sector, sometimes also referred to as the GameFi or Metaverse sector, has seen lower activity since June of this year. But despite this, the sector has managed to raise an impressive amount of money, proving itself as resilient. The report added that among the blockchains typically used for gaming, Solana, SOL, has taken the biggest hit in November, with usage down by 89.4% to an average of 2,326 daily unique wallets. The drop in activity on Solana is believed to have come as a result of what the market sees as ties between Solana and the FTX founder Sam Bankman-Fried. We just can't get away from that name, can we? Overall, however, DAppRadar's report made it clear that the impact of the FTX collapse on the blockchain gaming sector has been, I quote, minimal. The most popular games in the space were Alien World and Splinterlands, with more than 225,000 and 151,000 daily UAW, respectively. That was registered in September of this year. In terms of the NFT market, or NFT market, the Gods Unchained NFT collection was by far the most popular in October and November. It accounted for 64.25% of the total market. Phew, that is a lot. Question, is the bottom in? With the entire sector having been in a downtrend since May this year, early optimists are starting to look for a bottom in the market. In October and November, sales volume and sales count painted a mixed picture for the road forward. October showed some rising optimism in the form of increased sales count, while November recorded a sharp decline of 47%. Overall, the result has been positive, and I personally don't think there's any chance that gaming is going to lapse soon. As I said, people need entertainment, games are entertainment, they're addictive. Plus, they're digital, and digital is the way the world is going. However, with the joys of digitalization also come the fears and dangers, and one of which is hacking. And unfortunately, our next piece of news covers a recent hack. This was posted very recently on the 2nd of December. Anchor Protocol has been assaulted in a multi-million-dollar hack. Anchor, the blockchain-based decentralized finance protocol, or DeFi protocol, has revealed that the platform has been targeted by a massive multi-million-dollar exploit on Thursday. According to a recent tweet from Anchor, its ABNB token has been exploited, and the platform is currently working with various exchanges to quickly suspend trade of the compromised token. There you can see their tweet. Reportedly, Anchor reward-bearing staked BNB, known as ABNBC, a reward-bearing token for BNB staked on the protocol, was allegedly minted by the attacker in the amount of 20 trillion. These are the figures that we deal with these days. Since then, the exploiter has successfully obtained about 5 million USD coin by using the services like Uniswap, Tornado Cash, and various bridges to swap the funds. The exploit is assumed to have been caused by either a fault in the protocol's smart contract or a compromise of private keys. Further, after the exploit, a BNBC witnessed a sudden price drop. The reward-bearing token has decreased by nearly 99.51%. That is terrible, and is currently trading at around $1.49 as per CMC. However, following the exploit, Anchor stated on Twitter, by admitting that there is no risk to any underlying assets on Anchor staking currently, and all infrastructure services are unaffected. Please be aware of this, guys. Sadly, even the crypto world is not immune to crime. Now we're going to move on to another piece of news relating to Coinbase and their tokens. Coinbase drops XRP and other tokens. Let's find out why. We haven't seen a delisting from Coinbase in recent memory. In a tweet announcement earlier on Tuesday, Coinbase announced the token delisting. This is last Tuesday, not today. After careful evaluation, they said, we will be removing support for several networks with low activity on Coinbase Wallet, starting in January 2023, including BCH, ETC, XLM, and XRP. These routine evaluations allow us to continue investing in new features that make Web3 more accessible. Coinbase, once notorious for being too lenient on their coin adoption policy, is tightening the belt and cutting the fat. The move may surprise those that pay attention to tokens not named Bitcoin and Ethereum. I think they mean attention. XRP is generally seen as a low-cost token that is easy for cross-exchange swaps with its low fees. Similar sentiment is often shared with fellow delisted token Stellar, XLM, and both tokens typically sit in the top 25 to 50 in terms of biggest tokens by market cap, making them surprising cuts considering some of the more fringe, lesser-known tokens that Coinbase has listed previously. The final two tokens, Bitcoin Cash, BCH, and Ethereum Classic, ETC, are both the result of forks and will be recognizable to more legacy crypto users who can recall when these tokens came into existence as early forked coins. Their stagnant performance and slow retraction of relevance has led to an unsurprising result with this announcement. Well, there we have it. Some go, some leave. On that note, let's take a look at what Dan Finlay, the co-founder of Metamask, wants to dunk, or what does he want to leave the market? Metamask's co-founder and co-lead developer Dan Finlay says he's prepared to take a stand against Apple in solidarity with Coinbase Wallet. This should be interesting. Metamask co-founder and ex-Apple employee Dan Finlay says he's all in favor of the crypto industry ditching Apple's App Store altogether, calling Apple's 30% in-app purchase tax, I quote, an abuse of monopoly. I'll absolutely stand in solidarity here, Finlay wrote, in response to the news that Coinbase's iOS wallet app had previously been blocked by Apple until it removed NEFT transfer features. Coinbase's wallet announced Thursday that its users would no longer be able to trade or transfer NEFTs through its iOS app, arguing that even if it wanted to comply with the Apple tax, it would not be able to due to Apple not being integrated with blockchains like Ethereum. It's unclear what this would mean for current users of the Metamask iOS app. In emailed comments to Decrypt, Finlay said, "As of now, Metamask remains on the App Store, but we will closely monitor the situation in the coming weeks and months to ensure our users continue to have unfettered access to their crypto assets." Well, that's good news. Relief to you all. I've got to smile at this one because it's the classic case of the ex-employee coming back to bite the firm. But you got to admit that he does have a valid point. Although on the other side, you can argue that capitalism is capitalism, and we should all deal with it. Moving on, our next piece of news is related to platform Telegram, which is planning to launch a crypto exchange and non-custodial wallet. My word, even the social media platforms are going crypto. Pavel Durov, the founder of the messaging app Telegram, revealed on the 30th of November through his Telegram channel that they are all set to build a collection of crypto tools. It includes non-custodial wallets and decentralized exchanges. He said that the solution is obvious, that the blockchain project should revert to the roots of decentralization. The solution that he is speaking of is with regard to the promise of decentralization and its apparent failure with the FTX collapse. The solution is obvious. The blockchain project should revert to the roots of decentralization, and crypto users must transition to trustless transactions and self-hosted wallets that do not rely on a single third party. This is the only method that can right the wrongs caused by the existing over-centralization. This is very interesting. I can't help wondering if this is a bid to up Telegram usage. So I'm wondering if they're trying to use additional features to attract a lot more users, especially trying to pull a large number from the crypto industry. In any case, BlackRock CEO says, "Next generation for markets is tokenization." BlackRock joins a growing number of firms backing the tokenization of securities, despite the CEO's wider crypto cynicism. In the world of blockchain, tokenization refers to a process where a digital representation of an asset is created on a blockchain, authenticating its transaction and ownership history. Speaking at a New York Times DealBook event, Fink argued that tokenization will provide instantaneous settlement and reduced fees. Despite these advantages, he added that the development of this type of technology wouldn't disrupt BlackRock's business model. So, supporting tokenization. People are always willing to surprise you. And, ladies and gentlemen, that is our last piece of news for today. To conclude today's news session, I'd like to thank you all for joining me. And dare I say it again, tap the like and subscribe buttons. It's a super easy thing to do. That means that we can continue on doing this, producing videos that keep you up to date on what is happening in the crypto world, so that you can take this knowledge and apply it to your investments and in general be a more informed human being. Have a great week and stay safoo.